Hello, this is James Duerr, your host of the James Duerr Show and your 7 steps to financial success, which you can find online on my website at jamesduerr.com. That's JamesDuerr.com. If you need anybody that can help you, I can refer somebody to you from everything from insurance to stocks to long-term care. You need to have somebody you can trust. You need to have somebody that I've vetted personally, but it's important to have somebody you can talk to, and I guarantee you, all my people that I refer you to, there's no cost for meeting with them, no obligation, but you need to take time to meet with them. So, what we're going to talk about today is have a conversation about your unique insurance number. Now, I can calculate your unique insurance number to the penny, and then you can change whatever you want to on it. So, it's all about being affordable to you, but you need to be fully aware what's involved in your insurance number. You just don't pull a number out of the air. You need to calculate it because a lot of times it's a lot more or even a lot less than you may think. So it's important that you sit down with a qualified professional and develop this. But let me give you kind of a head start on this. The first thing you need to calculate your insurance, your unique insurance number, is immediate money needs. So if you die, and we're all going to die, and we're going to talk about death a lot on my show, which is on Saturday mornings at 9:30 a.m. The Answer on in San Antonio, and go to the jamesduerr.com website, and you can hear all the podcasts there if you miss it. But the first thing you need to have for your insurance number and calculating your insurance number is you're going to have immediate money needs. So get your pen and paper out, pause this video, get your pen and paper out, and write down number one, immediate money fund. So if you're like most people, you probably if you die, a lot of times it's going to be you're going to have health bills, you're going to have funeral costs, you're going to have all these things that are going on that people are going to want money right now, your immediate money needs. So you want to put on number one here, you want to put, I'm going to write this down right here, number one, immediate money. So you're going to have your funeral costs, you want to have some medical costs, you want to have, uh, you know, uh, whatever is immediate money that you'll need, but usually that's funeral, medical, which could be quite a bit. So you put a number there, anywhere from 3 to 6 months of your salary. So say if you have 100,000 salary per year, let's just put down 30,000. So put down 30,000 for the funeral costs, which a lot of times it will make at least that much, but funeral costs, medical costs, and all that. So put down 30,000. So step number two, when I'm write down, is debt liquidation. So you don't want to saddle your loved one. Your loved one is already grieving when they lose you. So you don't want to have all these outstanding debts. So any student loans, any auto loans, any signature loans, anything you may have, write down on number two. So your debt liquidation. So you're going to write down all the people you owe money to in terms of loans, and come up with a figure. So say that's another 10,000 there. So then write down number three is emergency fund. So you need to have an emergency fund, money that your family has that they just put in a savings account. That's the only money I recommend putting in a savings account because of inflation. But putting in a savings account, and I like from 3 to 6 months of salary. So again, let's put 30,000 in there for your emergency fund. So we got immediate money, we got the funeral costs, we got medical bills, we got debt liquidation number two. You have your auto, you have your signature loans, you have your student loans. Write all that down, and then your emergency fund. Put down 30,000, put down 10,000, whatever you feel comfortable with. And then number four, let's write this down. You want to have your mortgage paid off. So say you owe 100,000 on your mortgage, so put 100,000 here. So whatever your mortgage is outstanding at this moment, write that down. So on step four, we have mortgage fund. If you don't have a mortgage, then you want to have rent fund. So you want to have at least 120 months of money that is going to pay for rent for your family. So let's go ahead and put 100,000 there for rent or for mortgage. And then, one thing, number five, I'm writing this down. Number five is childcare. Now, childcare can be just as expensive as college, maybe more expensive, depending on how young your kids are. So, calculate how much money your kids need to be taken care of, because if something does happen to you or your loved one, you are definitely going to need childcare more than ever. So, if it costs you $5,000 a month, and you have two kids and they're twins, say that's 10,000 per month, say for 12 months, so that's 120,000. So you see what I'm saying? For 12 years of taking care of the kids, especially when they're young, childcare, it's a lot of money. So put that in there. 120,000. Already having people contacting me on the show. So 120,000. Put that for childcare. So number five is childcare. Number four that you wrote down is your mortgage or your rent fund. Number three was your emergency fund. Number two is your debt liquidation. Get rid of all those auto notes and get rid of all the student loans and anything else. Number one, your immediate money fund. So that takes us to number six, education fund. So you need to decide. Do you want to pay for your kids for college? Do you want them to pay for their own? Of course, you're like me. You probably want your kids to go to Texas A&M University, the best school out there. So Texas A&M, you're probably gonna be paying about $30,000 a semester, a year for that, for room and board and all that, and tuition. So put 30,000 times 4, you got another 120,000. So this is calculating your unique insurance number, and this is kind of as far as most people go. So we have the 6 steps. We have immediate money fund that you wrote down. We have debt liquidation for pay off all your cars, pay off all your home, additional equity loans. Pay off, have an emergency fund set up. 3. Number 4 is have your mortgage paid off. Number 5 is have child care set up for your money there. And then number 6 is make sure you have enough money to send your kids to Texas A&M, class of '83, gig them. So most people stop there. You want to add up all those numbers. But the more critical thing right now is you want to have your income needs. So when you die, there goes your income. So if you're a 2-family earner or a 2-person family earner or a 1-person, take whatever you're going to lose on your income and take that number, say it's 100,000, and divide that by what you think is a smart, guaranteed type rate you'll get if you invest that money. So most people, we say you get 100,000 that you get per year, and let's do a 3%. So you want to divide your salary by how much you think you're in something safe, your money's going to grow. So we just do that calculation, 100,000, and we divide that by 0.03. If you want 4%, it's 0.04. If you want 5%, it's 0.05, and that is 3,333,333. So let's just say 3 million. So in my example, for income replacement, you would need a $3 million check for your family to continue to be getting 100,000 a year every year like clockwork. So income replacement is a very important piece of your unique insurance number. So I'm going to put 3 million here, and then I'm going to look at have 30,000 for my immediate money fund, plus 100,000 to pay off all my loans, plus 30,000 for the emergency fund, plus 100,000 for mortgage, plus child care, we calculate 120,000, plus Texas A&M, another 120,000. Actually, we were talking about having 2 kids, so that's actually 240,000. So let's put 240,000 in there, and that equals 620,000. So you probably didn't think that your income replacement would be that big of a number. It's actually dwarfs your paying off all your debts and all your future debts. So you need 620,000 plus you'd have your 3 million of income needs. So you're going to have plus 3 million equals 3,620,000 you need in life insurance. So I'm not saying you can afford all that, but term life insurance you get today, it's inexpensive, it's cheap. I mean, you get term insurance when you're young and healthy, and then you later on want to convert some of that to cash value, and we'll talk about that later. But 3 million is not a lot of money actually for term insurance when you're young and healthy. Even when you're older, I later on in life we had some expenses coming up, so I went ahead and got another $1 million on me in my 50s. So it's very affordable. But it's important for you to take care of your family. It's important to do this calculation to calculate your unique insurance number. If there's anything you don't understand, I know I was talking about student loans. Maybe your student loan will be forgiven. I'm not the student loan guy. Okay, but but I will hook you up with somebody who does college funding, and we'll talk about that later too. But this is your unique insurance number. If you have any questions on how to calculate this, please go to my website, jamesduerr.com. That's JAMESDUERR.com website, and send me an email, send me a text, whatever you need. I'm here for you as a mentor. I'm here for you as a financial resource. Doesn't cost you anything to ask a question. So God bless, and look forward to visiting with you in another conversation.